Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. We all want more time to spend with family and friends. We want time to engage in a purpose greater than ourselves, have some sort of meaning in life. The challenge is we spend most of our time working to make money in order to live. Let me say that again. We spend our precious time working to make money in order to live. Imagine a life where money could make you money to live in order that we could work less and have more time for the things that matter most. Well, you can. Learn how from everyday people who are making this a reality. Don't go anywhere. We'll be right back. Coming up, Sam McDadi teaches us all about the right investor mindset.
You know, I think the problem today, especially the young generation, they want instant gratification, right? If they understand delayed concept, so they pay their dues now, they build the residual income, then they can enjoy their life forever, perpetual, right? Which is really an important statement.
Everyday Investor is brought to you by Pro Funds Mortgages, fixed returns, real security. Clover Properties Rent to Own. Invest with a purpose.
Hey, it's Rob. Welcome back. Today we're talking to my good friend Sam McDadi, and we're going to learn all about the investor mindset. Remember, whenever you're faced with any type of investment opportunity, always ask the 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And number 4, what is the risk in the worst case scenario? Sam, thank you so much for being on the show.
It's a pleasure to be back.
Yeah, I know you're so busy. You're always traveling. You're continuing to build your business. You're giving back. And speaking of giving back, I'm grateful that you even believe in the show. You're actually one of the sponsors, and I really sincerely want to say thank you.
We're honored to be a sponsor of this show.
Yeah, no, it's fantastic. Sam, I wanted, you're a bit of an anomaly here. I said, we're going to do one show in the season that's not an investment strategy, because more important than the strategy is the philosophy, the mindset. And you have done very well in life. You continue to do very well in life. But I know you practice doing the right things. You're always learning. You're always growing. And so talk a little bit about, the whole premise of this show. Money is just a tool to be able to enjoy things, but you've got to think the right way,
I was fortunate when I was studying in the States years ago. I did an MBA, and I remember going back a few months after that to watch a college game with one of my friends, and he was a really successful fee-based financial planner. And he said, "Sammy, how are you doing these days?" I said, "Davey, I'm doing really well. I'm making a good income back in the day." And he said, "Let me ask you one important question. If you couldn't work for 6 months, how would you be today?" I sat back and I thought about it. I said, "Yeah, Dave, not so good." So I wasn't really saving for the future.
And this was in the corporate world.
In the corporate world, actually, I was just starting my real estate career. So it was really like many, many years back, right? Yeah. But it had me kind of rethink, it's kind of like the light bulb went on. I said, you know what? I got to start thinking about building residual income. And the one takeaway he told me that day, he goes, "Sam, figure out how much you need to spend or you need to live on a monthly basis, get to that number from a residual perspective, and you can effectively retire." Yeah. Right? So, I said, that's a great idea. I went back home, started giving mortgages out, started buying real estate, started getting positive cash flow, and now it's kind of the beginning.
Yeah, no, and I love that. You taught me that. You taught me, Rav, work backwards. Know how much money you want monthly to live. And so let's just say it's, $6,000 a month, let's just say. And so that's $72,000 a year, and now work backwards. What do you need to accumulate for that to spit out a conservative percent to give you that $72,000 a year net, right?
Exactly. Once you get there, the nice thing is now you're your own boss. You don't have to worry about what anybody tells you. You can call the shots. Where if you're working in a corporate structure, a lot of times you don't like your job. You're doing it, but you don't want to quit. You got a family. So you're kind of a slave to that job, but you're not really happy, right? So you want to find a way to be happy in this journey. If you can have financial freedom, that goes well into providing happiness.
Yeah, and I always tell people, there's not a lot of them. Scott McGovern, he's one of them, and Sam McDadi's another, that are incredibly successful, but people wouldn't understand how conservative they are. Sam, you're and I love it. It's so inspiring. And I guess it's because of the knowledge. It mitigates risk. But you're conservative. You don't fool around with the money God gave you. You put it in the right places. You have the knowledge. Where do you think that comes from? I mean, you say, Rab, I have real estate. Of course, I have RSPs. I have TFSA. A lot of my properties are paid in full. And we're kind of like, yeah, but you're a savvy real estate investor. And you say, yeah, I know. Where did that mentality come from?
You know, my dad was a successful entrepreneur, but he kind of took his eye off the ball and he lost everything. And that was when I was in my teens. And that was a bit of a paradigm shift for me where I realized, you know what, I want to work really hard, take care of my family. But I also realized if I was able to be in a position to be successful, I wasn't going to spend that away. So I saw my dad become successful, but, you know, he wasn't really fiscally responsible. And I didn't want to be that person.
Yeah. And it seems like you're very, you know, stress and anxiety adverse. Right? I mean, I've been doing some development deals. I've introduced them to you. To me, they're no-brainers. And you're like, oh, Rav, I'm happy with what I'm doing. I like what I'm doing. I understand what I'm doing. I make a return. I lend out money in mortgages. I have this property, that property, one in Florida, one, you know. And so, it's very good that you do that because you see, TV and hopefully not this show, but TV wants you know us to make it all about you know exciting and vibrant, and if it's not you know fun in real estate. But you've taught me no, real estate should be kind of boring, right? It should money should be making you money.
It should be. And, you know, I think the problem today, especially the young generation, they want instant gratification, right? If they understand delayed concept, so they pay their dues now, they build the residual income, then they can enjoy their life forever, perpetual, right? Which is really an important statement.
So let's rewind for a second. I want people to know who Sam McDadi is. So you had a scholarship to play tennis.
I did.
And you went to the States.
Yes.
What school was that?
So I was in undergrad school called Nicholls State. I did 4.5 years there. Then I did a master's, an MBA at the University of South Carolina.
Yes, and you look so, with age, you're looking better and better,
I
Sam.
appreciate the kind words. Listen, I take care of myself. I still try and play tennis 2-3 hours a day, especially when I'm in Florida, which I go down once a month as well.
So you did that, and then you came back here to Canada, and you were going to get into, or did you for a second get into just the corporate finance world?
I did that for 2 years. You know, I felt I should do that. I had an MBA, and I felt that was probably the right strategy or next steps for me in my career, but I was really disenchanted and really unhappy in that whole experience. So it was good to do it. Realized I didn't want to be there. Time was going so slowly. I wasn't happy. There was no passion. When I got into real estate, everything completely changed. My passion quotient went through the roof.
So you've said this a lot so far. You've said happy, to be happy. You know, there's two schools of thought, you know? Life is not necessarily about being happy, work hard, and later in life, hopefully we're happy. But it doesn't seem to be yours. It seems to be like, hey, if I'm doing something, I want to be enjoying it. Yes, there's going to be some small sacrifices. Is that the case? I mean, what is your philosophy on this whole? Because again, a lot of the younger generation, you know, I have a wonderful, beautiful son, 18, my daughter's 16, but they can think, no, I should be happy all the time. So kind of help me with that balance in terms of working hard, making sacrifices, but also still feeling purposeful and alive and happy.
Yeah, I'm really crystal clear on the fact that your vocation should provide you a level of happiness. It's not to be perfect, but if you're 30% happy, that's not the place you should be. And a lot of times people tell me, Sam, I want to get in real estate, and they think they can make money real quickly and easily. And I want to say first, listen, is this something you're going to be passionate about? If you're doing it for the money, you're doing it for the wrong reason. Mm-hmm. And sometimes I'll have kids saying to me, my parents are doctors, they want me to be a doctor as well, but I can't stand medical school, I don't want to do that. I'll say, guys, listen, honestly, if I was going to give you my 2 cents, follow your passion. If you don't like that, you're not going to be happy in your journey, don't do it.
No, it's great advice. It's great advice. I mean, we can't, life is about having a peace, having a joy, having a serenity. And if something's not doing that, whether it be your vocation or even a relationship or a commute or whatever the case, it's not worth it. You know, I've shared with you 4 years ago, I had a neural breakdown. I was riddled with anxiety, but I was, you know, putting in 5 hours a week in my, you know, my work and you know, kind of like the perceived dream life, but my brain was going, and I had to cut a lot of things off. And you know, I never believed in home ownership, economically speaking. I was always in putting my money in development and renting. And so since then, you know, I found a place that I love. I bought it, I renovated, got the dog, got the axe, chopped my wood.
You made the right changes.
I made the right changes, but it was a lot of your, you know, kind of influence that, you know, I watched you and how you live life. And again, just a very slow, steady, conservative approach. Okay, so we're not liking our gig that you did for 2 years. Somebody met with you. Said, Sam, if you couldn't work for 6 months, what are you going to do? You got into real estate. And, you know, to fast forward, I mean, I would say, and you can correct me if I'm wrong, I don't know if there's an actual real hard stat, but RE/MAX, largest brokerage in the world, really. And you were always, you know, top 5 kind of teams in that brokerage, and then you decided to transition and start your own. Kind of tell me about that kind of impetus. And how long ago was that?
Yeah, I can't believe it, Rav. When we first talked about this, I think we did this 2011, so 7 years ago.
Wow. So that's great. And so what's we're going to take a break here in a minute or so, and then we'll come back and we'll help the audience understand the different things and where our mind needs to be in investing. But what's next? What's next for Sam? What are you thinking about? What are you doing?
We're really excited. So we've opened up a couple of new offices, locations, one in Oakville, one in Milton. We're looking for space in Toronto. So we're still in the growth mode right now.
So different, separate under Sam McDadi Real Estate.
Sam McDadi Real Estate Inc., but different geographic locations.
And a full-service brokerage, which I know you're a big believer.
Brokerage, which we're high on for sure. So which includes all the staging, the pre-inspection, the full-blown marketing initiatives. So we're excited about where we are. We've got a great team behind us as well.
Selling very high-end homes, even trying out auctions. When you told me about that, let's talk about that when we come back. But it's great having you on the show, Sam. Thank you so much.
It's a pleasure being here as well.
Thanks for watching. Don't go anywhere. Sam's going to teach us all about the right mindset to have when it comes to investing. The Everyday Investor continues in a moment.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own. Invest with a purpose.
Hey, it's Rav. Welcome back to Everyday Investor. I am so excited about this show. We're talking to my good friend, Sam McDadi. He's teaching us how to think right when it comes to investing. Sam, thank you for being on the show. It's always great just to hang out with you. I miss you.
Feelings are mutual.
We used to hang out, play some cards, watch the fights, and we need to...
We missed you at the poker felt.
Yes, we need to catch up. You took too much of my money. Just kidding. Just before break, we were talking about this concept that I've never heard anybody else do other than you. And you've done it here in Toronto, you've done it, in South Florida, and that's this concept selling, homes, especially high-end ones, $5-10 million, and even more, which I think you're going to share with us, in auctions. How does that work? I mean, how does the auction, is it the real, going,
it really is an auction, and we had a couple high-end clients that were looking to sell their house. It's a time-money trade-off, and we said to them, if you had to discount the property 10-20%, but know you have a sale next 2 to 4 weeks, would you be interested? And many of them said, yes, we would be. We would just want to cash out. We can make that money work for us, as we, one of the things we talk about. So we had 4 auctions, and we sold 3 of the 4 auctions, which was a really good batting
average. And the seller was happy.
Seller was happy.
And this price point is, give or take $5 million, $10 million.
Yeah, $5 to $10 million range.
$5 to $10 million, because those are not. They don't sell quick. But
you could be years on the market.
This.
Yeah, you could be years on the market, and they feel like rather than be on the market, 1 or 2 years, if I can trade this real estate in 30, 60 days.
Wait a minute, say that again. 1 or 2 years, Sam?
For a $10 million asset, I mean, the buyer pool slims quite a bit. Wow. So you could be on the market for a long time.
I never thought about that.
Yeah,
and you're selling these in a couple of weeks?
Let's say you set the auction, you have a little marketing time, the lead time, 30, 60 days.
Amazing.
Yeah.
And so therefore, because time is money, when you say maybe they might get a bit of a 10% hit, but what would it be if it was 1 or 2 years?
Well, if they reinvested, they're astute business folks by and large, so they can make that money up real quick. Or sitting on a dead asset, it doesn't make sense for them.
And so you told me about one in the break. Why don't you share that?
Well, all our auctions we did with a reserve, simply meaning that if you had to hit a certain threshold of dollars, otherwise the seller did not have to sell.
So reserve. So if I have a $10 million, I could set the reserve at 8.5. If I don't hit it, then I don't have to sell.
It's at your discretion at that point. So we want to make sure the seller had control over the sale. They weren't going to take a 50 cents on the dollar offer.
Sure.
So one of my friends in Florida, who's a really good friend, did an auction recently in Fort Lauderdale, and he invested in this house with land and rebuilt about $23 million. So pretty significant house.
$23 million was the value of the property.
That's what he put into it.
That's what he put into it.
Land acquisition loan, $7.5 million. The build out was about 15 to 16 million, right? Unfortunately, financially, things were changing a little bit for him, so he went the auction route. He did it twice. The first time, both of the auctions were without reserve. So if you decide to run it, whatever money you get, you have to sell for. So, but the night before, you can make a determination if you want to move forward or not. So the first auction, he felt there was enough interest, he called it off. Auction 2, which was held last week.
So ahead of time who's going to show up and if they're going to make an offer?
You have an indication. You have pre-bids, and the incentive for the bidder, if he gives you a pre-bid, he saves 12% of the commissions. Okay. So there's a fairly good savings to be accrued, which the seller has to absorb. So round 2, which took place last week, there's 5 pre-bids. the highest at that point is around 14 million. So we talked, we strategized, and he's a good friend, so I gave my 2 cents in terms of I don't think you can not run it this time around. He ran it, but the theory was that they usually get at least double what the pre-bids were, which would put him in really good shape. But even if they got 50% more, you're at $20 million, which was his threshold.
20 million, and he put in 23.
23, but he decided to run it, no reserve, sold for 15.5 million.
15.5
So he lost about 10, almost 10 US, right? So it was a bit heartbreaking.
And then you do the conversion. He's a Canadian?
Canadian. Well, he's living in the States, but he's kind of, you can convert.
That's $12, $13 million he lost. So
yeah.
Sam, what's the lesson? What's the lesson to learn?
Well, to me, I think, that's why we always do it with the reserve, because you can control and dictate if you want to sell or not. If he knew he was going to get 15.5, he would not have sold this property. He would have then gone back to the market at a more discounted price and probably got 18, 19 million.
Okay, so let's talk about what you want for our audience to hear today. So one of the things that you're a big believer in is this concept of going against the grain. So talk a little bit about what that means.
Well, a lot of people have the herd mentality, so they just do what others do, and when the market goes the wrong way, they want to exit out. Even in the stock market, when the market goes down, you should be buying, but people want to sell, right? So I think you have to go against what the normal mindset is, right? And so in real estate, look at some examples. Prime example, 08, 09, when there's a period when the market really went, there's uncertainty in the marketplace globally, there's some great buying opportunities. What people do, they want to sell. Yeah. So you have to think differently than everybody else if you want to have success. And you have to have courage to know you're committed to your belief, right? And if you don't, you're never going to be ahead.
So give me an example of that. So 2008, 9, I know you were buying, right? Yep. And so give me an example of something you bought. Did you buy the one in Boca Raton at that time?
I bought that a few years later.
But give me an example of something where you bought when nobody else was and where it is today.
Well, I'll give you an example. I had clients calling me saying, Sam, listen, people I didn't know, strangers, we've got an offer in this property, my property, it's $500,000. Should we take it? So I need more information. What are you asking? This and that. Give me the street. I'll give you some, advice and counsel, but I need more details, more data. Oh, we've got a list for $800,000. So I said, well, 500,000 seems low. Why? Well, the market's going to crash, this, that. So people, if they had the foresight and the vision and courage to buy back then, they'd have made millions in 6 months because the market rebounded. But understand one thing about real estate, it always bounces back in the GTA. So even if there's a bit of a dip, you can't be alarmed by that. I mean, people are going to tell you, oh my God, the market's crashes. Yeah. GTA's too vibrant. There's too much going on here for you to worry about long-term correction. Yeah. Short-term, sure, we're susceptible to that. But I think if people understood that, they'd have doubled down in 6 months to 1 year.
So that $500,000 property today, I mean, it was 800. They were thinking about taking 500. Yeah. If somebody scooped that up, today it's over $1 million.
Over $1 million, for sure, all day long. So they'd have doubled down.
So I hear you saying, don't be afraid. When everybody's doing something, that's when you do the opposite. When they're not, that's when you do it. A little Warren Buffett,
It takes courage to do that. It's not easy to do that. When you hear the market crashing, correcting, the stock market, your first instinct, let me get out, oh my God, right? But you should actually be buying in. Dollar cost average in. I mean, that's what people should do. Smart investors understand that. And the ones who are, when in strong hands, they'll make the right decisions.
I love what you're saying. Because Sam McDadi is a conservative guy. And he still is a conservative. What you're telling me right now doesn't sound conservative, but it is because you do your homework. You understand it's going down, I'm buying because it's going to go up.
Even though conservative, it's minimal risk because we understand the ebbs and flows.
I love it. You fill your buckets up one at a time, starting with the principal residence. You are one of the most, I won't say aggressive, but savvy investors that believe in first paying off a principal residence, buying an investment property, maybe even paying that off and continuing. Talk about that because, speaking about going against the grain,
and I can't say what's right or wrong. I'm more risk averse by nature. I'm fortunate enough where I make a fairly good income so I can make these decisions. But I always felt after seeing my dad and what he went through that I don't want any debt. I want to sleep at nights. I don't want to have any exposure. So every asset I have is paid for. So I have no worries about, oh my God, what if I can't make this sale or deal? So when I'm in the workforce, I'm operating from a place of happiness. I'm giving clients good counsel. There's no financial duress. So that makes a big difference.
And that's the key, right? That's the key. I mean, people, I love those of you that tune in, but they always ask, Rav, what's the best one? Should I do this? Should I refinance? Should I pull money out of my principal residence? And my answer always is the same. Before, when I was young and naive, I'd say absolutely. Having money in your home is criminal. Now, even as a result of my breakdown 4 years ago, I say it's up to you. Can you sleep at night? And that's what I love, Sam. That's what you're saying right now. You're saying, I don't want to worry. I don't want to stress. I seen what happened to my dad. So I, Sam McDadi, can't sleep at night if I have a mortgage on my principal residence. And that's really great advice, because it leads to the next thing that you teach is, what is your profile? Talk about what that means. You always talk about the investor profile. What does that mean?
Well, it's really important. I understand and identify each person's risk aversion or lack thereof. So in my case, I know I'm risk averse. So if I'm talking to an investment counselor, they're going to ask you, what's your risk tolerance? And if I'll say I have high risk level, it doesn't matter, I can double down. If I lose it all, I'm okay with that. That's fine, as long as you understand the consequence of that. In my case here, like we talked about, I'm more risk averse. So if I understand a client has an appetite for more risk, then we'll maybe give them some investment opportunities that are slightly riskier, but still conservative, because I'm still more on the conservative side.
Your team, you help out, the professional athletes, whether it's Raptors or Leafs, you're friends with all these kinds of guys, you do the buying and selling. But I think what people don't know about your team is, it's a full service. You're doing a lot of helping people with investments as well. And since you have them, right? It's not just for Sam to do for himself. You're also helping friends, families, and even those that don't know you be able to do that. Your thoughts really quickly on, as a investor and even real estate investor, RSPs, TFSAs. What are Sam's thoughts?
Listen, for me, RSPs, I do utilize them. I believe that it reduces my tax exposure, so it's case by case. I don't think there's any right or wrong answer. Some people think RSPs, it's not a good gig.
Yeah.
I think you have to analyze it for its own merit and your own personal situation.
Yeah, but in a sense, you're doing like, hey, if the TFSA, if the government can give me RESP, if they can give me free money, if I can get tax-free on a TFSA, if I can bring down income, I mean, there's all that kind of stuff,
There's never a right or wrong answer.
Never a right or wrong answer. Very few things in life are absolute.
Lots of shades of gray.
And what's one thing that's absolute is I'm grateful to have you on the show, Sam. I can't believe time has gone by already. We have to have you back. Thank you for believing in the show, being a sponsor. Very grateful for you.
Rob, you're doing great things here. I think everybody should be very appreciative that you're providing this platform to a lot of the investors who are looking to seek some good counsel. So kudos to you.
Thank you so much. And thank you for tuning in. Without you, we wouldn't have a show. For more information on this show or any others, or to become an everyday investor insider where you can get investment opportunities, tips, advice, go to everydayinvestor.com and sign up. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon.